Well, the Australian market reached a fresh high, the milestone number of 9,000, but very quickly we saw some profit taking and we've pulled back over 100 points since that moment. So hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 2nd of September 2025, and before I start, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for yourself. The big story for the Australian market over the past month has been the earnings season. The earnings season pretty much wrapped up last week, but it was a pretty underwhelming season. In fact, many of the largest listed companies actually fell on the back of their reports. Now, that shouldn't be too surprising. Earnings for Australia really haven't risen for the Australian market for the last 3 years, and yet our share market is strongly, strongly higher. So when we do have earnings reporting seasons, often it's a bit of a return to reality. A return to reality, I should say, for a lot of the listed companies. And that was the case this time around. Of the very biggest reporting stocks, we saw CBA fall in its report, we saw CSL fall in its report, QBE, Rio Tinto, a lot of the Wesfarmers, a lot of the sort of top 10 and top 20 stocks that reported, I would say the majority of them even, actually closed lower on the back of their reports. Now, it's not just the Australian earnings season that has sort of triggered a little bit of revision, perhaps, in some of the narratives that investors have conjured for themselves. The other major earnings report that we've seen recently was Nvidia's report. Nvidia, listed in the US, is the world's largest listed company. They make all the computer chips necessary for AI and for Bitcoin mining. And yeah, they've become the biggest company on earth because they've had such insane growth with other tech names putting so much money into AI infrastructure. Even though the report was very good, it did point towards a bit of a slowing in growth towards AI spending, a bit of slowing in growth to Nvidia's revenues. And I think that the market sort of even though there wasn't a huge sell-off on the report, the market sort of cluing in a little bit to the fact that perhaps the growth might slow from here. So we did see the market push up to a record level a fortnight ago, and then across the past week, a little bit of profit taking, particularly here in Australia, and I would say in large part triggered by those earnings reports, particularly some pretty disappointing local earnings reports. The other thing that sort of pulled us back a little bit has been the dividends. So when a stock pays a dividend, the share price falls by the dividend amount, and as that happens, that also takes points off the stock market. So about a third, perhaps, of the drop from the peak, maybe a bit more than that, but around a third has been due to the dividends as well. That being said, one of the big driving factors behind, why markets have rallied since October 2023 remains in play, and that is the expectation of interest rate cuts. We popped to 9,000 after or with the Fed meeting, the Fed Policy Symposium in Jackson Hole, Wyoming, where the Federal Reserve basically said they're going to cut rates in September. And they said that that was despite inflation remaining strong. So they've been put in a pretty hard position, the Federal Reserve in the US. They've got to basically choose between, trying to keep inflation under control, and inflation is rising in the US to the sort of multi-month high. It's about 50% above the Fed's target level, 3% versus 2%. So they're trying to decide between trying to control that inflation number or trying to support the jobs market and the underlying economy. And at the Fed meeting, at the Fed Policy Symposium, they basically said they were going to support the jobs market. They were going to basically try and save jobs and stop the economy from going into recession. And as a result, we could see inflation start to or continue to push higher. So that admission, that concession from the Fed, gave the shares the last little bit of push that they've had. Yeah, that was why we reached 9,000. The Australian Reserve Bank is also expected to cut interest rates at their next several meetings, including at the end of September, and that's because the Australian economy is not in a good shape either. Most of the Australian economic measurables are pretty poor at the moment. and really it doesn't look like things are getting too much better anytime soon. So yeah, like I said, it's one of the big factors why shares have rallied since October 2023. It's the rate cuts, and more rate cuts are expected. That's another bullish carrot dangling in front of the market. The other sort of thing that's been driving share prices higher over the last 2 years has been government money printing. In the US, government money printing is only accelerating. Uh, when I say that their government deficit is 7% of their GDP, that doesn't really make any sense to people, or they don't really seem to grasp what that means. But hypothetically, if they were to run a balanced budget like we try to do here in Australia, or a budgetary surplus, like we often try to do here in Australia, uh, that would remove 7% of their GDP. They would be in another Great Depression. It'd be worse than the Great Depression, basically. Um, so yeah, that money printing is essentially flowing to asset markets. Gold just set a record high. Share prices are setting record highs. Other asset markets are doing very well as well. And like I said, part of it is rate cuts, part of it is the government money printing, particularly from the US government. Finally, over the past week, the Australian market, like I said, it's come off the high. We reached 9,000. Intraday, we got to about 9,040, I believe, something like that. And then we've pulled back since then. Today, we closed bang on 8,900. Off our intraday all-time high, we're down 140 points over the past week. Quite a large move in the space of sort of about 5 trading days. Now, a lot of that has just been due to profit taking, perhaps partially it's dividends, and it's I would say it's not necessarily signs of a sort of huge bearish correction, but perhaps a little bit of a portfolio reshuffling. Investors have been disappointed by a lot of the reporting companies this season, so perhaps taking some of the money off the table. Prices are at record levels. If a stock is not growing their earnings, that may be what we're seeing. Investors taking some money off the table, reducing their exposure, receiving their dividends, not reinvesting in the companies, and I would suggest that that's perhaps what we're seeing occurring at the moment. That doesn't necessarily point to a huge further sell down from here. I think for our market or for the Australian market to see a correction, which would take us back towards 8,100. That would have to come from or be driven by some US selling, some US bearish movement, and we're just not seeing that yet. So let's have a quick look at the charts for this week. This is the Australian market, the XJO, and as we can see, we rallied up to the peak around 9,000. Intraday we got to about 90.40, 90.55 intraday, and then over the past sort of week or so we've pulled off. In terms of where I'd put the resistance, I'd probably put it somewhere around 90.15, 90.20. And after breaking this sort of uptrend, we might be just witnessing a shallow out of the uptrend line. We are still in an uptrend. We've still got the high peaks and troughs. Unless we go below 88.50, perhaps the previous trough, you have to assume that we're continuing to trend higher with the continued higher peaks and troughs. Should we break 88.50, that's where we might see a bit more selling. But until then, we have to assume continued upwards movement. And even over the past few sessions, even though there's been a bit of profit taking, it could simply be a little bit of readjustment before we continue to go higher again. So let's have a quick look at the US market. And this is the US S&P 500. Similar uptrend. Obviously, this one's been shallowed out a few times as well, but definitely still uptrending with the high peaks and troughs. Recently, they fell back to 6,400, maybe 6,380 as support, also the trend line, and then we had the news from the Fed Policy Symposium. With that, they basically rose to a new all-time high at 6,500, rose to that level on Thursday, pulled back a little bit on Friday, and they were closed overnight for a public holiday. So overall, they're looking perhaps a bit more bullish than we are, holding inside the ascending triangle at the moment. Should they break that trend line, we're looking for a move back towards 63.80, maybe as low as 63.50 or as high as 6400. If they break to the upside, the resistance is at 6500. If they break 6500 to the upside, It's very hard to say where they'll head, but I don't think it'll be too much higher. Like I said, they've also had their own somewhat disappointing earnings reports, including Nvidia's report, which, yes, obviously, you read the headlines, it's better than expected, but those expectations are a scam in the US. They're completely rigged for the companies to be able to exceed them. It was a disappointing report because it's showing slowing revenue growth for the world's largest company. Alright guys, I will wrap it up there for this week. Hopefully you enjoyed. Apologies that there was no camera this week, but trust me, you just have to assume I'm looking good sitting in my seat here. And yeah, hopefully you'll see me next week, next Tuesday, same time. And until then, I hope you have a fantastic week. Bye for now.